Pretty small group so far, but hi, Lindsay. Hi, Robert.
Hi.
Hello.
Hey, Lindsay, did you make a decision on your burr, what you were going to do with that? Were you going to leave some money in there or take it all out?
Still makes me nervous. But no, I'm not leaving money behind. I'm just gonna take the cash flow of $50
Mhm.
per month and see what goes from there.
Yeah. And then the money, since you are pulling the money out, you were going to get that ready for the next purchase.
Yeah. So not immediately, but I do have two other properties that are being birthed right now.
Oh, okay.
And one that I haven't started. But I did wanted to start paying back my HELOC because all of the money is compromised in the other two bursts too. I do have I want to get another one, but
Mm-hmm.
I need to slow down.
Yeah. A couple of us had that conversation over the last week because we bought a couple over the last couple months and it got a little bit hard because money has been very tight. And if I had just waited on one of them, that it would have saved about $30,000 to finish everything else that was going on, and would have been quite a bit easier. But I did it. Now I got to figure it out and keep moving. So, but after that, I'm definitely learned my lesson. So we'll be going slow and steady from here on out.
Yeah, that's what I'm trying to do for sure. And I know you guys are way ahead on your journey and looking back, you're even the Frank, not Frank, but Mark, the firefighter, he
Hmm.
always says, like, I wish I would just slow down and not go all in and deplete all reserves when something happens. So
Yeah.
that's what I'm trying to do. It's not sexy though.
But it will be. So you mentioned your HELOC. Did you take that out on your primary?
Yes. And it's interest only for the first 20 years.
Oh, okay.
So it's not like a huge payment. So that's why I feel like it's not
Hmm.
such a big deal, but
Do you mind if I ask how big of a credit line it is?
it's a 200K credit line.
Okay. Yeah, I appreciate you guys, whenever you're okay with talking about stuff like this, that helps a lot, could help a lot of people. Um, I was Hopefully some more people will jump on with us tonight, but a small group is just as nice as well. But I was going to say, for you and Robert, Mikey and Michelle already know, but if there's anything that you guys feel we could add to the meetings, that would help you guys anymore, or a different format or anything like that, just feel free to let me know because we're trying to improve it every week and just make sure that everybody that comes is finding value in the meetings, I hope.
Yeah, of course. I'm always finding something else that I'm learning every week. So
Great.
it's really appreciated. That's why I keep joining. I might not be consistent every week, but I try to jump in when I can.
Yeah. Have you tried any of the other groups like Sunday or that early Monday morning one?
Yeah, I tried Jared a couple times on Sundays, and this morning I joined for the ladies of Orat.
Oh,
It
nice.
was mostly introductions, but it is the first one I attended to for them. And
Yeah.
I'm Pacific time, so that benefits me.
Okay, right.
Um, yeah, and yours, of course.
Yeah. How big of a turnout did you guys have today?
We had 6 members. No,
Oh,
7 members. Yeah.
Great. Yeah, I think that that's an awesome group to get started. I was thinking that today too, because we some of you ladies join us each week, but I was wondering if hopefully any other women who have joined us over the past months don't feel intimidated, because a lot of times there are more men than women, but um, I don't think I mean, that was just kind of a natural progression. It wasn't anything, that we strive for.
Intentionally.
Yeah, not intentionally. So I would love to see more women join us. And over the past few months, I mean, there's probably 10 or so that have popped in and out. So that's been really nice, because honestly, a lot of you are more advanced than I am, for one, and Michelle doesn't say it too much, but she's very intelligent, and we've learned a lot from her. So I was gonna I was fooling around in school and asked, some of the older people uh about getting together, because well, for me, we started late again. In I was 57 when we started the second time around. And so I was interested to kind of see what other investors again started late, and how they're doing, and what are their goals. Ours is obviously cash flow at this point, but so we're trying to set that up too. But I think a couple of the ladies in the group had reached out before that, and were a little bit older, starting on their journeys too. So I just think it's interesting that um, to get different viewpoints and learn what they're doing, where they're doing it, is really cool. And we've made some connections here, right, with people in the same state and that kind of thing. So that seems like it's helped a few people as well.
Yeah, and it is I don't think it's as intimidating as you may think. I think most of us girls that are in real estate, that we are probably very aware of the fact that there's more men in the industry. But it's just nice to see how other women are dealing with it throughout the country, because everybody is different. Like, some people are doing fix and flips and buy and hold, some realtors, and so it's just, to have more resources available to you that you can just tap into.
Mm.
That's why we're here, a
Yeah,
community.
that's great. I was really surprised the other day. I forget which post I had put out there, but another woman in the group was going back and forth with me on some things, and I just asked, if she had started investing yet. She already has 200 and something units, and I, I was just blown away by that, because the way we were talking, it almost sounded like she was new to investing. But
Oh.
yeah, she obviously wasn't. Yeah, and you just never know. I mean, all the people. We met somebody the other day, and it must have been last Wednesday, or maybe it was on one of Mark's or Dion's calls, no, it was in Dion's course call last night, and there was a young guy, or younger guy, from Oregon that had some trouble in the past with something he bought, and was working his way through it. So he didn't really have any properties right now, but um, once he enrolled in Dion's course, and um, it was nice because he was able to get in there and ask Dion questions, and Dion's a great teacher, like we all know. But um, yeah, so you just never know who you're going to run across.
Mhm. what are you working on, Frank, right now? I'm not sure if you already said this, but
Oh, no. So we're over the past few months, like I said, we bought two properties in St. Louis recently, a couple of months ago, and then so we were fixing those up to get them rented, and things were just dragging on. I've talked before about how communication is a thing because we'll email the property manager one day and it takes them a day to get back to us, and then they need a day to schedule their guys to go and give us a scope of work. And so it's just been dragging out. And in the meantime, we had a duplex in Milwaukee that we had to evict both tenants. And then our other single family in St. Louis, the tenant moved out. So we had 5 vacant units. And that's why I said earlier, if I hadn't bought the last one, we would have had more money to get everything, fixed up and listed for rent. So that's been a super challenge and a little scary at times. Right now I'm applying for a HELOC on one of the properties that we have because we had paid cash for it, but it's a very low price point. It was only 70,000 when we bought it. And there aren't too many people that go down that low as far as doing HELOCs on investment properties. I checked with, I talked to Matt, the mortgage guy today. He didn't have any resources. I talked to, Jonathan over at Convoy. He didn't have any resources. And the lender that we used to buy the last two they have a process, but it's all animated or automated, I should say. And when we are going through that application, it asks for, what you're like for a stated income, annual stated income. And I put in $121,000. And then it asked for tax returns and bank accounts so it could verify the income. But with all of the accounts and everything, it only verified 101,000. And I guess the system just stalled because I didn't have any more accounts to add to it to get us to 121. But you can't change anything very easily. Even our lender can't go in there and change it. So we called them and I asked them if I could adjust the number that I put in for stated income, and they said you can, but you have to cancel this application and we have to start a new one. And now the lender was having trouble sending us a new link to start a
Mhm.
new application. So I was doing that in hopes of just having some reserve money in case we needed to finish all the last of the remodeling. So
Mhm.
that's
Are
been a
you still
challenge.
having trouble finding someone?
Um, yeah, right now we're stuck trying to restart the application with that company, and nobody else that I've reached out to.
TD Bank.
What was that?
TD Bank, they're who I just used on my second mortgage. So if I remember correctly, the minimum loan amount is 25,000 up to a 25% LTV. The only stipulation with that, so this is a second, not a primary, right?
It's an investment property, yes.
All right, so oh wait, so no, they do a HELOC up to that amount because they were off the minimum HELOC and in well, so this was a HELOAN, not a HELOC, but they were offering up to 25,000. I think their HELOC was the same amount. For the HELOAN, anyways, they wanted a 43% DTI, which is pretty low, but worth giving them a shot, perhaps.
Mhm.
Because I remember on HELOANs, they were like, because yeah, I went to Convoy for my recent second mortgage too, and well, had I known it appraised as high as it did, and I was able to take out more than $100,000, I would have gone. But I was thinking I'd only be ending up around 60, so I went to TD Bank instead, and so give them give them a try, maybe. I
Yeah.
just had success. It wasn't that hard of a process. for me.
Okay, that's great. Thank you. I
Uh,
appreciate it.
I also saw, what was it? I never took out a loan with them, but their website name is called Prosper. If I read their, if I was reading their website correctly, oh no, that was only He Loans, not HELOCs. I don't know how that works if you try to take out a He Loan against the property that doesn't have a primary mortgage. That I don't
Oh,
know if they let you. I don't know if they let you do that or not. But why not? Why not try? Because they're weird. They don't offer HELOCs for investment properties, but they offer He Loans, and I saw they're willing to do up to, if I remember correctly, all the way up to 15% LTV. Now I don't know any other requirements. They might be more like stingent on DTI or something, but
yeah.
that's what I saw recently. Doesn't hurt to ask.
Yeah, no, I'll definitely give them a shot. We there was a couple of so this one company that we're with right now is called Figure, and like I said, it's all automated. So our lender sent us a link. We started the application process, and but I was telling I think Mikey that these are blockchain based lenders. It looks like from what I've seen, they're LLCs, and it seems like they might be a bunch of um, either private or hard money lenders, big group of them that are doing these loans. So, and like you mentioned, the DTI, I think that might be a thing because our lender said we were at 49. And so, but like you said, it's definitely worth a try. I appreciate the names. I might have to call Jared and get a 6-month loan or something.
Yeah, you could do that.
Yeah, he says he only likes to go for 6 months. But that would put us into springtime and hopefully everything's full by then and we would be able to get the money right back to him. Hopefully we won't need to spend too much of it, whatever we did, a HELOC or a private money loan from someone. So,
And
but
you're thinking you want to keep the asset like, yeah, because you bought it with cash, so you just want to tap into the equity. But have you thought about a cash out refi?
yeah, that was the next thought. And I probably will chat with our lender about that tomorrow too, because the only reason I didn't want to do it was because of the rates right now.
Yeah, I understand. I'm getting at 7.2 for my cash out refi with prime lending, which I thought it was better than what I was quoted initially, like an 8.0.
Okay. Yeah,
But
that's
I
not.
was thinking same thing, like in the summer, rates do go down, I can refi again
Mhm.
out of the 7.2.
Yeah, even if they stay there for, like Super says, they'll probably stay there for the year, but even
Mhm.
after a year, if they go down 1% or something, it would
Mhm.
be worth refining. And yeah, obviously we wouldn't pull out too much. I think the first time we talked about it, we were going to get about 47 or 49,000. So it's not a huge amount. Um, so that's great. You said you used Prime Lending.
I did. I'm not sure if they're in Missouri though.
Okay.
I did give your information to somebody from the meetup this morning because you invest in St. Louis and she was also looking into investing in St. Louis. Hope you don't mind.
Oh yeah, no, that's great. Happy to chat with anybody. We've a couple of people from the group. I know Esther and I can't think of the other name right now, but they've reached out to the agent that we work with in St. Louis and the lender and even our property manager. So I think Esther was looking for duplex. Um, so I'm not sure what she decided yet because she's got a couple of ones that she bought last year in Gary that seem to be doing pretty well. So that's great. I appreciate the suggestions. Thank you. Hey guys, good to see you. Kyle, Chris, Anna.
Hey, Frank.
Hi.
Hey, sorry I'm late.
That's okay. It's just a few of us so far.
I think everybody's getting ready for Thanksgiving. I lost track of time. I meant to join at 9, but distracted.
Yeah.
Reviewing a contractor bids.
For what kind of work?
Funny you should say that. One project, residential duplex, converting a one bedroom with a upstairs large attic to a 3 bedroom plus den. But the real interesting bid I'm reviewing, Frank, you're gonna laugh. I think you're gonna laugh hard. Is a $3 million bid to convert an old Rite Aid into a Canine Resorts dog hotel. My first like real commercial bid. I'm buying a business. I'm just like it's a little gut wrenching to look at numbers this large.
Oh, I can
Because
imagine.
my largest reno ever was like what, 200K, 250K, maybe, right?
Yeah. So did you actually decide to move forward on buying the business?
Yeah, well, yeah. I mean, yeah, basically. But I got SBA in my shorts. SBA loans are a pain. I mean, God bless them for helping the small business person, but like, it's probably easier to have a credit score of 400 and try and get a Fannie Mae loan than it is to try and get an SBA loan with a credit score of 750. So
Yeah. Well, that's a big step on that decision alone.
yeah, I'll either be doing really well or living in a gutter in 18 months. So
Or living with the dogs, yeah.
yeah, I'm living with my mom at 78, right? So
Well, that's awesome though. That yeah, you guys talked about that a lot last week, and I'm sure that was not an easy decision.
it is still not an easy decision, but yeah, yeah.
So what again did you say it's a for dogs?
Yep, I bought a franchise in 20. I was, diverse trying to. I had diversified out of equities into real estate hard in 2020, but I realized that I wanted to test the limits of like maybe one more diversification thread. So I looked at businesses, looked at franchises, bought a franchise after a lot of research because my day job I've diligenced 50 companies for the pet industry, and I realized it's a pretty good industry for a while, I think. So, but I was I wanted to be picky, right? I wanted my cake and eat it too. I wanted to put a franchise in a really high end growth, like moderately well off area.
Mhm.
What I didn't appreciate is that finding real estate or leasing options for that franchise in that area that's wealthy, cheap cheap real estate in a wealthy area is actually kind of a bit of a hard ask. So it took me 2.5 years to find real estate. It was only Rite Aid going bankrupt. And what's ironic is in my day job, we're helping Rite Aid work through their bankruptcy. Um, but yeah, we had a Rite Aid go bankrupt. We got a great lease opportunity, but like the build out, this is the only franchise that's approved by the American Vet Association. The build out's a little more pricey than I had expected,
Mhm.
and it's a bigger site than the traditional one. So a little bit of a risk factor, pucker factor, but we're working through it.
That's great. Had you been thinking about that type of franchise for 2 years?
Yeah, I mean, I actually committed to buy it in late 21, early 22.
Okay.
After I looked at buying some businesses, I looked at some franchises, and decided this was a good compromise because it would have been too hard. I think this is it's a lower. I could be wrong. I could be an idiot, but I think if you don't want to, I'm not looking to get another day job. I already have a good day job. I wanted to buy something as an investment. So my strategy was buy a good, strong franchise, good brand, good profitability, you know, that had a model where you could buy as an investor, but double the cost of the general manager for the business and add profit sharing. but I could probably find somebody interested in, helping to run it. So I don't have to be involved day by day. I could be involved week by week or month by month. And that was kind of the strategy. But I was going to be really picky on the area, and it just took a long time to find an attractive site. So
Good. That's exciting. Kyle, it's been a while.
What's up, Frank? Yeah, it's been a while. I haven't joined in. Been
How you
kind
been?
of busy doing some other stuff, but I've been watching your video. I saw you on with Mark the other week or whatever.
Oh, cool. Yeah. Cool. Anything changed in your situation since we saw you last?
Uh, I mean, I'm just looking around. I kind of jumped into the Ohio market a little bit, so I'm kind of looking at quads out there, like a quad to eightplex, something in that region. Probably more closer to a quad, but pretty open. So, yeah, man, same thing out here. Probably gonna sell one of my properties here in Brentwood, out in Cali.
Mm-hmm.
I kind of take those profits and move it over to Ohio and keep the house hack here. And the other two are pretty smooth in Cali. So, uh, one in Idaho is running smooth, got some new tenants in there. I was a little worried about that, but I mean, someone was in a month later,
Oh, good.
a little bit of cleaning stuff, normal stuff when people move out and, running pretty smooth, man. So, gotta
Kyle,
work
we're in
on getting.
Ohio, if you don't mind me asking.
I'm kind of looking in the Columbus region. I was going back and forth between like Columbus, Cincy, and Dayton. I know there's a kind of broad area, kind of the major cities in the area, but kind of like what they got going along in Columbus with Intel and everyone going there. A little bit safer, but Cincy had a lot of quads too, which was pretty interesting. So kind of bouncing
Nice.
back and forth, but kind of
Did
looking
did
towards Columbus.
did you consider Cleveland at all? I only asked because I had my first client in Cleveland last month. I spent the last like two or three the last couple of weeks in the area. I was just driving around, and the city, the city is a city, but the suburbs are really interesting. Seems like coming out of Pennsylvania, like it's a much better economic growth environment than PA, which was really surprising to me.
Yeah, I hadn't looked in Cleveland too much. Maybe just bad rep from the city itself, but I'm sure the suburbs are probably something to look into too.
Really, really nice. I was super impressed.
I was also somewhat curious, and this one's a bit left field, but like Huntsville, Alabama, I kind of like what they had going on right there in their economics, and Alabama's
Yeah.
their property
The
taxes I think are the second lowest in the nation, so that's always pretty enticing, you know what I mean? So
yeah,
anytime you cut those kind of costs.
I have clients at the Army Material Command and Airbus down that area. It's got some interesting stuff too. I don't know that area as well, but economically it's a great area.
In Huntsville, sorry.
Yeah.
Okay. Yeah, that's what it kind of piqued my interest. I like what they had going, and I was still learning more about it, but when I started looking at property taxes per state, uh, Alabama being the second lowest really piqued my interest. So I was kind of trying to see what made sense in there. I didn't want to be on the coast of Alabama. I kind of just staying away from the whole Gulf Coast, with just insurance, and I don't want anything to do with the hurricane. But Huntsville was pretty north, and like I said, kind of like what they had going on. So I'm still kind of interested in that. It's a little more expensive, but I just always try to balance out like cash flow and appreciation. You know, if I jump into these cash flow markets, not really going to get the appreciation. I'm a little younger. I have time on my side, but all my investments up to this point have kind of been a little more appreciation, just figure it out. And I have a pretty good W-2 job, so I kind of just put money where I need to go, but trying to make a little bit of a switch, you know what I mean? Balance out the portfolio. So,
Cool.
but yeah, always busy, man. Glad to
Yeah.
hop on.
Yeah. It's always good to see you. I think Anna's in Alabama. I'm not sure which part, Anna, if you're listening. Um, I was going to ask too, though, on your properties, do you manage them yourself?
No, I pretty much have property management. I did do the Idaho one by myself for about a year and a half, but I just kind of did a room by room thing. I knew one or two people that lived there, so it was kind of a little bit of both where, I managed it, they helped me out, but once they were kind of ready to move out, rents went up so much and property prices that I mean, the rents went up so much, it just made sense to do property management and move on, and you almost forget about that one at this point.
Mhm.
So It's probably my favorite property.
Yeah, I just was wondering because you mentioned the one turnover that you had. So did that tenant just move out or something?
Yeah, yeah, they just moved out. They were there for like 2 years. They were really good. He was getting his own house built out there in Idaho, so tenant pool's pretty good in the area. It's a suburb of Boise, like 20 minutes, Kuna, Idaho, Meridian, Boise. So really good area, really good tenant pool that moves out there. So uh, pretty solid on that one, you know what I mean? So trying to balance it out in other places.
Great, good. Yeah, I had the other day when Dion and Zuber were on, I had asked because you made me think about that about, if you have something good going in one market and you have a few properties there, would they consider trying another market to kind of diversify the portfolio? And they were both no, don't even think about it. Why would
I
you?
know. I think I watched that the other day. That wasn't too long ago, right? You did a
No, it
little
was, yeah,
chat.
a couple days
And
ago.
they brought it up, and I was kind of thinking the same thing. I'm like, well, technically, that would put me in about three markets
Uh-huh.
when I jump into another one. The ones here, though, I live here, so it's a little easier. Idaho's almost on autopilot, so jumping into a third, um, I
Yeah,
think I'll be all right. But yeah, I did catch that, and I kind of laughed and smiled too, because I was like, man, they busted no right off the bat, and that's exactly what I'm going for. So.
yeah,
I don't know. I'm just in expensive markets already. You know what I mean? I mean,
right.
you live in Watsonville. I'm just over here in the more East Bay. You know what I mean? So I just feel like I have a good W-2 job, and I do have pretty solid appreciation plays here, and it's just time to jump into some quads and some multifamily, or maybe even a duplex, just in the cheaper markets where my money goes farther. A little more cash flow plays, I guess. Stable it out.
Yeah, yeah. Have you ever talked with Harrison? Trade Better?
I don't know if I have personally. I mean,
Yeah,
I see him on all the chats and hear him talk and stuff, but
yeah,
I
I
haven't
believe
talked to him personally.
he's in Ohio too. I'm not sure if it's Columbus, but yeah, if you ever get a chance to chat with him, he's very, very helpful.
Yeah, no, that'd be great. Anyone that has any experience in the areas, because it's really foreign to me, because I was kind of born out here. So even when I'm looking up Google Maps and stuff, these other areas, or they just have streets of quads and duplexes, like that's like nothing. They don't have that here. You know what I mean? So it's a lot different. And
Yeah,
houses being a lot older, and like 1920s, 30s. It's kind of to me a little weird, but shit, I mean, the whole East Coast is like that, so
yeah,
people do it.
yeah. And we were looking at in St. Louis at some of the older brick, twos, threes, and fours, and once in a while you'll run across, someone where the landlord's already redone the plumbing and the wiring. That's the biggest
Yeah.
thing. I mean, the buildings themselves are solid, and if it has a good roof on it, the age, doesn't really matter too much.
Yeah.
Hey Kyle,
Yeah, I
it's
don't
Troy
know.
here.
What's up, Troy? How's it going, brother?
Hey dude, I think just enlighten this further because I know Kyle and we've talked about this before. I'm actually from Boise area, so I know where his property's at. I think what you're thinking about doing is a good move. Boise's outgrowing your buy box essentially, so it's staying in that market. I don't think really serves you as well as it did when you bought your property. You struck a gold mine on that one because you got it before the appreciation of the property just skyrocketed over there, and everybody else jumped on that market as well. So, if you're trying to get your bang for your buck, if you're looking at more Midwest properties or something like that, to where you can you know grow your portfolio, like what Zuber talks about, the growth stage. You're in that growth stage where you're trying to accumulate properties, and whatever you're going for, what you feel is necessary, if it's appreciation or if it's cash flow. I think either way, you can take the cash of what you're going to get out of your property, which you can put it into. You can get what, 3 or 4 times more than what you probably could in the Boise market, and then it's not even possible in your own current market where you live. So it makes a lot of sense to me.
Yeah, no, it's good to hear because I kind of struggle back and forth all the time on like the cash flow and appreciation, but I don't know, it just makes sense. Like you said, Boise's kind of outgrown it. Even Oakley, where I live now, I think when I first moved here, houses were about 450-ish or something. I mean, they're in like the 650 now, just out here in Oakley. I'm sure Frank kind of experienced the same thing to an even bigger level, but it just doesn't make as much sense here now. I mean, I still house hack and can do that, but figured it was just time to move out of state and start investing in a little more cash flow. I mean, I don't know how you guys feel. It's always the tough question, right? Cash flow versus appreciation, but figured if I have 3 or 4 pretty solid appreciation plays already that I've had for a few years, figured I could sell one that was more of a flip that's not my favorite property at a 7.5 interest rate, kind of make 50, 70 grand off of that over the year, get my 200 grand back, and then I just have 200 grand, 220 grand to kind of go all in on these out of state things, you know what I mean? Give it a test run. So
Yeah, and the price points, in the other markets are a bit lower. So if you try one, and even if it's a quad for, I don't know, between 200 and 300, and you're in it for 100 or something, then it, like you said, at your age, you're young enough to recover from something like that. Plus, you have the other properties to back you up. Wouldn't be good, if it was your first one or something like that. So, interesting thoughts. Did
So
Oh, go
I,
ahead.
I was just about to say because yes and no. Um, so I'm in the position. So maybe Frank, you could answer this question because I'm going to compare it to what I could do in my own market. Well, not that this is also a very unique opportunity, but well, I'll share a couple of examples. So I have $80,000. I could probably buy something free and clear in St. Louis, right? Or
Mhm.
something. All right, free and clear. How much would that cash flow?
For 80,000, you could probably pick up a pretty clean 2-1, and the rents, right? We were getting 1150 for the one the tenant just moved out of. We bought that one for 70,000 cash, and it's a C area, you know. Um, so that was pretty good for what we put into it. If you go up to 3 bedrooms, they're right now, again, a nice one. We just closed on a 3-1 that was 106, and the projected rent is 1350.
Okay, so so yeah, definitely a better cash flowing market. But I question that with, I guess, I'm taking too much after Matt with value add plays. Like, for instance, I like very recent value add play. Duplex for 320. Um, let's say I'll probably be into it for like, well, among other things that need to be taken care of this building, 20 $20,000 $20,000 to increase the rent by probably 700 by adding a bedroom in a student rental market. Now, now the total cash flow from that when I'm taking out a loan and adding all, so when all's said and done, from that 40,000 plus that 20,000, I'm probably gonna now be cash flowing. Well, minus all the reserve stuff math I do, I'd probably be okay, probably closer to 1,000 than if I were to like do a 15% capex like Dion does. But still, it's like, we're talking, what was that, 45 because I put 15 down and then 20 and then 20,000 in rehab, and now I'm with, we just said 80,000 number, right? I'm 65,000, and well, I guess with that free and clear example, let's just call it 1,000. Let's just say I do 300 reserves. But point being, we're close. Me being in a more expensive market versus the Midwest. So maybe just look at things a little differently in your market and look for if you're comfortable doing more value added opportunities, because I agree with you. You know, I bought something in 2019 for 338 that just appraised at 570,000, and that was a duplex. The tris and quads have gone even more parabolic, to some people in some instances trying to, for a quad that would have pushed, that would have been 400 in 2019, trying to push a million. Now I'm in southern New Hampshire, which is like, that would be like less than an hour outside of Boston, so that would be why prices are very high, and especially because living in New Hampshire, you can live a Boston lifestyle and get basically no sales tax, no income tax by living there, and reap and still be very close to Boston and reap such a benefits. So that's contributed to explosive growth in that, which has made prices insane. But yeah, more to say, it's like, you know, I feel like me having a very good job, I still feel very priced out having, if I wanted a triplex, even doing a house hack 5% down, all in with closing costs, I'm probably still at like 60K for like cash to close these days. So I've adjusted I've adjusted my thinking on what to do. Like so like right now, I'm working on, this was, well, I don't want to use the word luck because I know what Mike, Dion, and Matt hate the word luck. Let's just call this a very unprobabilistic event happened where I cold called a seller on my first try and he said yes to a seller financing deal. Let's call that very unprobabilistic. Why this is a good deal is because I can, because there's value there. Not, the seller financing was great that I got a 5.75 rate for 8 years. But what's more better about this is this could be a 2, possibly a 4 unit. A 4 unit would be much more difficult. I'd be adding 2 studios because basically it's a duplex with 2 beds, 2 baths in each unit, but there's an attic that's just a bunch of random rooms, has electrical and heat, and 1 bathroom. So there's not a lot of effort to convert this. Well, not a lot, subjective term, but when I mean not a lot, I'm looking at, well, if I go with Matt's idea, I'm probably more like 50, which his idea is better, but I could cut corners per se and do it for more like 30. But point being, just by spending that 30 to 40, I'm now generating $160 more, no, $1,600 more in cash flow per month. Because, and what's my cost there? Like $50,000. So again, you know, I could buy a property free and clear, you know, St. Louis, or I could put 50,000 into this and I can increase my cash flow. I could get a $1,600 return. Plus, I can get the added benefits of, I can tell you New Hampshire is still going to appreciate, being, it's definitely still going to be an appreciation market, being an hour outside of Boston. And what we don't talk about too is rent multipliers. The rents are going to go up faster. Like, so this so that would be a 2-bedroom apartment. And I say 1,600 just being conservative, because that's basically like an attic apartment, like those 2-bed, 2 baths that are actually like full height are probably going to be more like $180 to $2,000. And it's like, those rents are going to grow at a much faster pace than rents in St. Louis, or probably your more expensive markets. So just something to consider for all that long rant, just because I like to use concrete examples, maybe just try looking at things differently in your local market and just see if there's value to be added, and look at it more of like, if I add this value, like, what would be the cost of buying something in a quote cheaper market, and can I add more value by doing it that way? Because yeah, I could go to St. Louis, but then, I definitely have to do property management stuff, and well, it's more of a me problem if I'm on Matchboat. If I don't like property management. I don't think they care about my properties as much and stuff, but anyway, something to consider, see if there's sweat equity or value to be added, or rent growth equity, instead of just saying like, oh, this is a done building in my market and it rents for this.
Those are all great points. And it's been a thought of mine because I do realize that appreciation is probably not a thing for us in these markets in St. Louis. And I think that my thought on that is it's like a natural progression, right? Because we got in and we picked up the properties that we have, knowing what we did and things like that. And now that we're in the markets, finding contractors and finding resources like that, the next thing for us might be a BRRRR or something like that, something where there's a little bit more value to add than what we've been picking up, in these 3 years we've been doing it.
Yeah, and to reiterate the point, the only reason why I can do this seller finance deal right now is because I took that, well, appreciation and sweat equity out of the high appreciation asset. But to also say something on that point, like, not only did it had great appreciation gains, it's had like, between the sweat equity and the just growth of rents, this thing has had almost a $2,000 rent growth in 5 years for being a duplex. So like each side's rent has gone up over almost $1,000 in 5 years. So talking about rent growth, I don't think you're going to get that in now. I know they say don't count on rent growth, but rent's going to go up in the long term if you're going to play the long game. And I don't think you're going to get those types of rent multipliers in a cheap market.
Mhm. Yeah, I think you're probably right. I think that's pretty evident when we listen to Dion, in his market, and his stuff is the same. A lot of appreciation over the last 3 years, and like you said, the rent multiplier is definitely better in that market than in ours.
Oh yeah, two very similar markets.
Mhm.
He's like what, like 30 minutes an hour outside of like Seattle, Tacoma, and the difference being it's like the major metro I'm close to is Boston.
Mhm. Yeah.
I really think you got to be very focused on the numbers if you're judging appreciation versus cash flow. It's a price point. I mean, you're comparing markets in the last 5 years, which I feel can be very dangerous because what has happened in the last 3 years, you can't compare it to any other market conditions we've rarely ever had.
Mhm.
So, I mean, if you're taking 2019 to 2017 appreciation and factoring those in, then I think you're being honest with yourself. If you're taking 2019 to 2023, 2024 appreciation, I think you can sabotage yourself if you're gauging appreciation, because when the markets were flooded with so much money and all markets were appreciating dramatically. So I mean, it's if you're really in the details of the numbers and you're looking at a market and you're looking at what your appreciation is, you got to also think about like anything else we should be doing, period, when it comes to buying a property. What is your exit strategy? Are you in it for the long run? Are you looking at it for appreciation to where you can refinance it down the road, to where you can take that capital out of it and redeploy it? Or are you just in it for, hey, I have this X amount of dollar. Can I get into this and see that it's in an emerging market to where I can get good cash flow out of it and it's going to have some steady appreciation, and potentially it might be like what Kyle ran into with buying in CUNA. Like the market just took off. It's in a really good market. It's where people want to live in the area, and it's a steady, good property. You can get those with lesser value and still have the capital to where you're in it for a little amount, but after a while, you're going to be paying either that loan off, and then it's all pure capital, and you can take whatever money you're getting out of that and redeploy it in other assets as well. Or you can turn around and sell it off. It could be a property that's like, well, it's not performing how I really like the two versus my other properties. I'm just going to move from this and then redeploy it somewhere else. And at that point in time, who knows how much capital you have in your accounts to where you can put it in maybe a stronger appreciating market, or, like markets where it's a much larger metropolitan area. It's, I understand what you're saying, Robert, and I think it's very valid. It's, at the same point, I think what you're saying is just being honest with yourself and looking at your surrounding markets to where you're looking at, is it easier for me to purchase something that is close by that I can provide value in, that might have stronger appreciation. But to me, I feel like if you're doing something versus appreciation, you're looking at either refinancing it to take the money out of it, or you're looking at selling it to take the capital growth out of it. That's whatever your exit strategy is.
Okay. So just to be a little clear, that appreciation stuff I was talking about was the cherry. What I was more talking about is like value add for rent, as in, like I said, the example of adding a bed. Honestly, adding that bedroom for student rental for 20,000, where 10,000 of it was just more or less adding a new service panel because that unit's service panel was woefully underpowered, but I'm adding that anyways, and then doing the electrical work to that unit. Or what I'm doing right now is like, there are some finished rooms and a bathroom that aren't counted as any unit. I'm going to add those as another unit. And then what I was comparing against was just, taking a lump sum of cash and just buying, in a cheaper market outright, versus doing that value add on another property, and then the rent value I'm adding is greater than what I would be paying for with my money in a cheaper market. And I was just, in that note, I was pointing out the fact that the value add increases your property value, that you can then redeploy your capital for the next. But the most important part was doing a value add, not for appreciation, but for rents, like adding a bedroom or adding another unit, is what I was saying.
Yeah, definitely. That makes a lot of sense, Robert.
I mean, a great example is Radeon. I know he's not on here, but damn that man, he's killing it. Well, he also, the town he invests in also decided to lack zoning laws, but we're talking a person who bought a dilapidated property from a home for sale by owner, from a guy who really needed out for it, for $150, which is a steal. That's in Keene, New Hampshire, and if it wasn't dilapidated, it'd probably be more like 250 to 300. But because of some zoning changes the city does, he could potentially turn that thing into a fourplex and make that thing worth well, let's talk about rents first. Increasing the rents by like $300,000 to, heck, maybe even, yeah, let's stick with $300,000 and adding $300,000 of equity in it. So it's like, Radeon's probably the best example of that one single family to 4 unit he bought. Now he's probably going to have to put like over $100,000 in it, but at the end, it's like he could have like fixed it up as is, and what's that? That would have been a 3 to 4 family. Rent that out for like $2,300. I'd have to get the exact bedroom count for his plans with him, but he's probably going up to closer to, with that being a fourplex, $5,000 a month.
We were talking about them a few weeks ago, if it's the same thing, because on a couple of our properties, we did, it's ACV or actual cash value, or maybe it's all cash value, but on the two properties that we paid cash for, we're insuring them for the purchase price plus 20%. And like, Mitesh, I think it was Mitesh saying, if something like this happens to the property and it burned down, we would basically get our money back, and the extra 20% would pay to have the lot scraped and cleaned, and then we would probably sell the lot. I've
My
heard,
my understanding is that in addition to what you just said, that the cash policy is set to not, like, you can't claim anything other than that value, I guess, or the, like, if the if the if the building is not destroyed, you're not in a position with the cash policy to file any other claims. In other words, it's not like up to a certain level. It's just like, hey, if this thing gets wiped out, then we're going to pay. But if not, you're basically self-insuring. And that's my understanding of that term, at least. And I've only heard it once, so I'm trying to, gather some understanding of it before I, talk to insurance people.
yeah, with how I found about it was I found out about it through our agent in St. Louis, and I guess it's been weeks now, but we were wondering when we were doing our analysis on properties or getting pro formas, right? Our agent would put out a pro forma, and the turnkey providers would put out pro formas on properties we were looking at, and their insurance number was really low all the time. And I was like, that's not accurate. When we called for insurance, it was twice as much as they were stating on their pro formas. And a couple of things came into play. One was with the turnkey provider, they had so many properties with a specific insurance company that they were giving them better rates. And then the other thing that our agent informed us about, that some of the other investors that she works with just insure their properties this way. So we have, I think, just the two that we're doing cash value, and all the rest of them right now are full replacement. There was a question brought up the other day about if you do cash value and you have a loan on the property. I think Beth Traverso answered one of my questions in the school platform, that when that happened with her, the insurance company or the mortgage company controlled the disbursement of the funds to make sure that the home was rebuilt. So I'm checking into that right now to see.
So is that your understanding, the piece that I also added to that they don't, that no other claims other than replacement is generally allowed in that type of policy? Just wanted to get a sense of it. That jives with your understanding of the rules.
Yeah, and I'm going to double check. I'm going to double check with that specific insurance agent too, since you asked, but that was my understanding. And Matt and the guys have always talked about they're not going to use their insurance no matter what, right? So they'll pay out of pocket. So like you said, if half the house needed repair, then they're going to pay out of pocket to do that.
Yeah, it seems like it's going from a low deductible to a high deductible, or any other reductions of insurance to a cash policy, it's just kind of like every rung of the ladder all the way to self-insuring, basically. Because it sounds like a cash policy is really close to self-insuring, right? It's like the whole place is gone, you still get your money from the insurance, but other than that, you are self-insured. That's a lot. That's a lot more than just having a really high deductible. So it was above and beyond what I had ever heard from Matt, and so my ears perked up when I heard the term. So thanks, I appreciate the clarification. So it doesn't sound like it's just a myth.
I just dropped a link to Zuber had a couple weeks back an interview with somebody from Steadley from the insurance company, and they actually talk about that. So
Okay.
you want to review that?
Right.
The takeaway for me was that unless you have a very specific reason to use actual cash value, you're going to want to do the full replacement. There's I forget the scenario. I gotta watch the video again, but there's just very, very specific reason why you would want to do actual cash value. Obviously, there's less, they give you less money, or there's less value to repair, which is why the what do you call it? The payment is so much lower.
Yeah, I do replacement value on my policies. What deductible do you guys usually keep your policies at?
I try to go for the highest.
As large as possible.
Yeah,
10,000?
with the Florida rules, we're not able to raise our deductible very much. I think they force you to have like a $2,000 or $3,000 deductible, and that's it. Like you can't even push it past that because the insurance companies run Florida basically. So, whoops.
Yeah, on those that I spoke of, we were able to go up to 5,000. The typical was 2,500. And so part of my thinking too was in the beginning, maybe the first year or so, that we're saving half of the cost on the policy, and then after the first year, once everything's stabilized, we could bump it up and do the full replacement. But doing the larger deductible and doing the cash value cut it right in half.
I don't know who was on with Dion last night, but if you weren't, last time I talked to y'all, I was talking about starting to move our portfolio out of state for the for insurance reasons, the numbers getting worse and worse, and just trying to get ahead of that trend. And I posed it to Dion last night, and I've already talked to Matt about it, and Matt was like, "Yep, that sounds right." But Dion had the exact opposite perspective. I mean, he didn't use these words, but my sense was, nope, I don't try to predict the future at all. No interest. If the numbers are good, the numbers are good. The rest, other than that, future is, just don't even bother. Put your head in the sand and
You're in Florida, Jeffrey?
what was that?
You're in Florida?
Yeah, I'm in Florida.
Yeah, me too. Yeah, from what I understand, or at least what I gather from watching videos and podcasts, etc., eventually the costs will be carried to the consumer, right? So what does that mean? That we're gonna have to raise rents eventually to accommodate for those costs, right? So
Yep.
technically speaking, it's you might have short-term pain. At least I do, because I don't want to just raise $200 a month to my tenants, but long-term it should even out. So I don't know. I was thinking the same thing because it's so expensive here, plus the HOAs and all that. But I'm like the amount of work to kind of move to a different state that I don't know about, and then the risks associated with that, right? The unknown didn't seem worth it to me. So I don't know.
A lot. I mean, just 10% for property management, and then any other issues. It's like the numbers have to the predict like if I'm not going to do what Dion suggests and actually
Mhm.
think about the future, I have to assume that the numbers are going to be tremendously worse than what they currently are in order to factor in all the other problems with out of state. So that's a good point. It's like, that's a lot of, I mean, 10%, let's say our portfolio is generating $22,000 per month, give or take. So 10% of that, what is that? 2,200, right?
Mhm.
So we have to have a $2,200 a month. What is that per year? That's like
24 and change. Fine.
20, like 26,000, right?
Mm.
But we have to have an annual. We have to have the pain has to be $26,000 on an annual basis on this portfolio across the entire portfolio for us to just break even on going out of state with nothing, with all things equal, just due to, the cost of labor for someone else with boots on the ground, property management and whatever. So that's a chunk of change.
Now, along those lines, what I have thought about, I don't want to say I'm considering it, but it's certainly an option, is to sell some of the a couple of properties that I have that are single family, the townhouse and a single family house, and hold that until I find a good multifamily deal.
Right.
I don't know if that's a wise thing to do or not, but it seems like the prices are starting to trend down in Florida. So, you know, uh, I don't want to sell it when they're at rock bottom either. I also don't want to try to predict the future. Who knows, right? They might
Yeah.
go up again.
Well, if nothing else, you're converting the equity into cash flow. So you're taking money out of the equation
Mhm.
through the cash flow, the increased cash on cash versus, the cash is just sitting there in equity and I'm not going to take it out unless it's dependent on that value of the property being
That's
maintained,
exactly right.
Yeah,
That's what I'm
I
guessing.
agree. Like, so it's like if you stay in state, and we're kind of doing that right now, it's like, well, stop thinking about appreciation so heavily.
Mhm.
Don't concern ourselves so much with, oh, housing values are just going to keep going up forever. It's like, no, just concern ourselves with cash, optimizing cash flow in the area. And then in 5 years, if things go catastrophic, or 7 years or whatever, hey, we have 5 to 7 years of pretty damn good income from that,
Mhm.
assuming that there was some really bad stuff that happened after that.
Yeah, that I'm wrestling with that because I have so it makes a good return because they're paid off, right? These are properties that I bought a long, long time ago, and they were very, very cheap, and all the appreciation that possibly could have happened, I feel like they already did, right? At this point, I can maybe expect 1% a year, if that, right? And like I said, maybe it even drops. So I have a lot of equity, at least relative to the cost of the properties, right? They're pretty much 100% equity on each. I'm thinking I can probably deploy that to a better asset, right? To a multifamily newer property that I won't have to, worry about structural problems or, um, the like, the properties that I have, they're not in the greatest areas. They're maybe C plus areas, but I'd love it if I can get to like a B plus area. Um, and even if it cash flows the same, at least it would be a better property. That's my thought process. If I can switch it and cash flow the same for a better property with a mortgage, I'm kind of okay with that. As opposed to my current situation where it's cash flowing pretty well, but it's all equity, no mortgage.
Yeah, that makes sense. Anyway, so I wanted to share that perspective because it was so dramatically, it was literally the other side, taking the exact other side of the opinion that Matt had shared with me prior. That like Matt's position was just like, I wouldn't invest in Florida ever. Like it's just you guys just have too many frightening events. I want stability, and kind of went on from there. So to hear Dion say, like, have such a different perspective, obviously a little confusing. It's always nice just to have one answer and say, "Oh, that must be the right answer," but it's helpful to see that there is not one
Yeah.
mind about the set of concerns and fears that seem obvious, but they're not. They're not obvious when you think about taking it all into consideration.
Yeah, there's a lot of variables. One of my properties, I don't have that many, but just one of the properties I have in Jersey, and it's in a town that's kind of up and coming and it's growing and it's appreciating well, and probably a good place to look to invest if we can find a good deal. But on the other hand, it's in New Jersey, right? So it's a blue state, and might have issues with tenant evictions if that ever becomes a problem, right? It could be months before I can evict somebody, whereas in Florida, it takes about 3 weeks or so, maybe two, if you do things right.
Yeah, there are some real upsides that we have as landlords in Florida that a lot of other states do not enjoy.
Mhm.
I think Dion always has a great points of view that are different than the other guys. I liked when he was telling you or talking to you about the ratio of the insurance increase versus your rent increases and how those, could the rent increases outweighed the insurance increase, even though it could maybe it doubled in a year,
Yeah, exactly. I mean, that hyper rational, like really looking at the math. It's really funny, like I always think of myself as, somebody who is not an emotional decision maker, at least, even if I feel different emotions. Then when I hear it from the outside telling me to do the exact rational thing that I haven't yet done, and yet I was about to make a pretty big decision that was gonna have a massive impact on the next decade of investing without having already done the rational thing, I'm like slapping myself in the face, like, you're not as rational as you pride yourself to be.
Have you guys ever considered buying a property as an investment property, but in an area or a home that you would eventually want to live in? Or is that a mistake? Basically, you're buying it with a future outlook that, hey, whenever
So
the right time comes, that's where you're gonna live.
I do,
Yeah.
and my exit strategy is always, well, in the worst case scenario, I'm gonna move in there and then try to find the house that I would really like it as a, resident. I try not to buy anything less of the quality. I do that.
Yeah. Um, that's another consideration I'm doing having as well. Sell the properties in the C areas and get something in a B plus area that I could even live in if I choose to.
I think where it gets tricky is how does that impact how you value it, right? Would you be willing to pay more for that or not? I mean, like, will you be willing to have an alligator for a couple of years knowing you might move into it? That's what I don't have an answer. That's what I kind of have to think through, because a house is such a personal, emotional decision where you want to live, or it can be. Yeah. Like I think
You're gonna
if
have
I was
to
a
be halfway through that. Don't buy
yeah,
alligator.
Yeah, I mean the numbers matter, right? It's going to make a difference. But I've heard some people say, that's the one way to go about it if you're just interested in making money and making investments, right? Because there's could be a lot of cash flow in properties that are in areas where you might not want to live. But I don't know. I feel like even though it might not be the financially the right decision, if the numbers align somewhat, I mean, why not? Why not buy something that you would want to live in? I'm thinking of doing that now with new construction. Saw some property that I really like and might be able to trade some.
I think we're kind of in that position, Santiago, because we're Cynthia and I are thinking that we might sell our house here in California and move someplace else where we could use most of our equity to maybe not pay for a whole nother property. But you got me thinking that if we bought a multifamily, or Dion has described before that he has a property that has a duplex, and ADU or something like that.
Mhm.
So if we bought something like that and rented it out for a few years, because we're also considering something multi-generational where one or two other family members might go with us.
Right.
I could see that.
Yeah. I guess each situation is unique.
Mhm. Yeah, it is.
Yeah, we were thinking about moving out of our place that we're living in right now, into someplace smaller because we bought this place, I don't know, 15 years ago, and the rents in the area now are like 3K per month. It's just big and totally nice place to be, but yeah, there's a nice income on the table for the location, no doubt about it.
I think I have to see if I could find the video, but Zuber was talking to some older gentleman that was ready to retire. The situation was similar. I'll try to find it because I think it might have some other thoughts on that. I see your comments. Go ahead.
Just real quick, along those lines, my family's a real estate family, and one of the things that we've always said over the last 10 years is that, if we had, for all the different homes that we've owned, when we moved out, we did not sell, we just rented it, which is obviously challenging to do. But if we had done that, we'd probably be a couple $1 million richer at this point.
I think that's Zuber's stance, right? Never sell. I heard him saying that on one of these daily financials or something.
Yeah, I think you're right. You can make a lot of moves on the chessboard without selling, because he was talking recently about if the right situation came about, he'd sell a lot of his single family stuff and jump back into larger multifamily.
Yeah.
Jack, did you say you're not working tonight?
No, I'm actually here in person with you guys.
What got you the whole week off? Are you on vacation?
No, this is just a regular night off.
Oh, I thought you meant you weren't working this whole week, but it's just Wednesday this week. It's good to have you.
It's good. It's good to finally be here. I feel like it's been a while since I've actually been in person.
Yeah, you got on for a minute last week.
I'm surprised you guys stayed on for another 20 minutes throughout my whole lunch break.
So, Frank,
Yes, hi Anna.
hi. So I'm just getting back to the conversation that was going on at the beginning, that somebody was talking about Huntsville, Alabama.
Mm-hmm.
So I invest in Florence, Alabama, which is 45 minutes drive from Huntsville on a straight road. So if anybody's, and then I have 3 out-of-state rentals in Florence, and I'm actually thinking, and then I have 1 rental in Washington State in my backyard, and so I have like 2 different places, and I'm actually looking at maybe I started to think because I wanted to have 1 more rental before I retire, but because of the price, the down payment is so large to buy anything here in Washington. I thought I was gonna maybe this time I already have 3 in Florence. Maybe I will buy 1 in Huntsville. So I'm kind of looking in and out around the Huntsville. So if anybody's I didn't know, I couldn't remember who that was. I just came back from walking a dog when the conversation was going. So thought I was gonna share that I'm in 2 different places.
Yeah, thank you for that. I had asked you about that earlier too because it was Kyle that was on with us in the beginning. He was the one that was starting to look around that area.
Oh, okay. All right. Nice area though. Huntsville area.
Yeah, we'll try to let him know. I think I have his number. If so, then I'll shoot him a message and let him know that that you brought it up again. Chester, I hope you guys are learning a lot on that other meeting you guys were attending.
Oh, you're talking about the bright investor calls?
The Bright Investor, yeah. What are they? Are they going to be every week?
Yeah, they're every week. Um, well, adjusted for, whatever time zone, 9 Eastern to 10 Eastern, and then Saturday, 1 p.m. to 2 p.m. So we do a lot of or provide a lot of feedback to mainly Donato, but anybody's welcome to provide whatever feedback. It's pretty good, useful for the tool.
Good. Just wanted to give you a hard time about that. Mark, are you just causing trouble in the chat, or do you have something to say this week?
Causing trouble? What are you talking about?
Yes, you.
I'm listening and learning and taking in all the information. Yeah, nothing really. Just listening to what you guys got to say. Always listening for topics that come up.
Yeah, that was a good call you guys had yesterday. Like I said, when I saw the advertisement come up for it and said 7, and I'm always listening to you guys at 7 in the morning, and then I realized it was 7 at night.
Yeah, Hyder could jump on. So I have a feeling like if someone adds their channel to the live like last minute, that's what messes it up.
Hmm.
So I don't know. So
Oh,
because I've been having, yeah, it's been going fine, and then either, yeah, it messed up in the beginning, so that's why we jumped onto Zoom. But I don't know.
oh, I see. So were you trying to do what other platform have you been using that Restream or?
Yeah, I use Restream, but then like I think Curtis joined the last minute, and then he tried to add his channel because he was going to stream it onto his channel also. And I have a feeling that messes up the stream initially,
Hmm.
and then yeah, I don't know. That's my assumption, but I'm not sure.
Was Dion was talking about trying it too. Is that a lot easier to because doing Zoom and setting up a live and all that stuff, you have to jump back and forth between YouTube and Zoom. But he was
Oh,
saying,
yeah, StreamYard and
oh,
Restream are super easy.
oh, okay.
Yeah, it's super easy, super fast. Yeah, it's way. I mean, if you can get it to work all the time, it's awesome. But I think if you were just gonna stream by yourself, there shouldn't be. I don't think there's gonna be a problem. But I think it's when you maybe try to add other people, and then if they want to stream it to their channels, yeah,
Yeah, it did come up as an option for me one time when you invited me about a week ago. It asked me if I wanted to stream it on my channel too. And I thought about it for a minute, but it wasn't going too smoothly, so I just jumped on regular. That's the
that's
day.
the one I couldn't even talk pretty much.
Yeah.
Yeah, yeah. I mean, I like it when it works. Just I gotta figure out the kinks for it.
Hmm.
But last night's one was fun because Jared, yeah, Jared jumped on and Hyder was there. So Harrison was promoting your shirt. He was wearing your shirt.
Yeah, I'm finally wearing it tonight.
How many are you at so far? How many you sold so far?
It's going really slow. We only have sold about 25.
Oh, that's good.
Yeah, it's something, but I don't know. I thought it would have a little bit more interest.
Well, I
That's
mean,
why.
even the tickets aren't selling that fast too, seems like. So maybe people are just waiting, kind of,
Hmm.
you know.
Yeah, that was a thought as well. Maybe waiting for the election to be finished.
Okay, I'm ready to buy it, Frank, before it's gone. I was just afraid that it may be all gone. I'll text you. I'll reach out.
Yeah. Thanks, Anna. Shoot me a message. I'm sure we have
Okay.
your size.
Oh no, I wear large.
What size?
Large.
Large?
I wear. Yes. I got. I'm gonna be wearing small. Oh my gosh. Next to medium.
I think you can use it as a nightgown if you get a large. You said you were medium, Mark?
Oh yeah, that's a fitted look. Well, my plan was I wanted to buy like I was hoping you'd be closer to the 100, but I wanted to buy like 5 and then um give them out in school in a sense, like um wherever had the most whatever post for 1 week gets a shirt kind of thing, like the
Oh,
last 4 weeks before they, but we got to pick it up, man. We got to get closer to 100.
yeah, that's a great idea. I had a couple of thoughts like that had crossed my mind too. Um, almost like doing a raffle for something, for
Yeah.
like if whoever buys them during next month or something like that, put them in a raffle and come up with some kind of a prize.
The price should be to
Yeah.
spend 1 hour with you, Frank.
A 1 hour call with me. We'll have to get somebody famous on there to do a call with them.
See what Mikey's doing. He's
Well,
pretty famous.
yeah, he's getting a little too famous. He wanted to charge me last week to spend some time with him.
Mikey's gonna give out cans of spam with every order of a shirt.
I'll buy a few. Yeah, thank you for trying to think of ways to move them. I think maybe you're onto something there.
I didn't know you had shirts to begin with, Frank. Where's is this advertised somewhere? Is it on your channel? Or...
Yeah, we did a video on the school platform, and I did them on my channel on YouTube. I did them on Facebook on my channel, but it's this shirt, that I'm wearing. It has the ORAT in the front, and then in the back, it's a dream catcher with.
So look, you gotta model it, man. Do the twirl and everything. You gotta model it.
Well, I don't think it'll come through on this, will it?
I don't know.
Bubble
I think
maker.
I think I can post the pictures.
Yeah, the back is super cool.
It
Did
sounds
you
a
have-
lot like a back of the van episode.
Oh yeah,
Did Chester just call me a troublemaker?
probably.
I called you a troublemaker a while ago. Maybe read that message.
I figured at this point Mark would wear it as a badge of honor.
I don't know how to. Oh, Mikey's sending pictures. There you go, Santiago, in the chat.
Ah, okay. Yeah, I gotta catch up with my videos. I have a long list, a long playlist of YouTube videos to catch up on.
Yeah, but the idea is that we're selling these. They're $30, and that's pays for the shirt, the shipping, and then it leaves $10 left over. And we were hoping to sell 100 so that we could give Zuber $1,000 to present to the Blind Center this year or next year when we're there.
Gotcha. That's in the link that Mikey put in there. That's for your shirt, right?
Yeah.
How much are you putting aside for the shipping again? I'm sorry.
The shipping range has been ranging from $6 to $9.
But the 30 that's the shipping included, yeah, Frank.
Yes.
Yeah.
Yeah. The shirt, the shipping, and then $10 donation.
And a can of spam.
And I think Mark's going to be offering a pair of Crocs with every order.
Whoa, that's a little steep, man.
Those things don't cost that much, do they?
What?
Yeah, they do.
They do, man.
Do they?
Especially if you pimp it out and you get it all customized and add.
Yeah, I did it backwards. I ordered my bedazzling kit before I ordered the Crocs, so now I'm waiting for the Crocs to get here. You guys are a little bit off of real estate. Does anybody have any real estate questions, or we'll just keep going like this, I'm sure.
I got a question for you all. I just want to hear your inputs. So I posted the eviction yesterday, and there's two people in there. The one guy has always been like the main point of contact, but the girl, she instantly texted me back saying, I didn't know this was going on, blah, 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 blah. I have the money right now to get caught up. I was thinking about having them sign a whole new lease for 6 months, let them get themselves caught up and fix a few things that are going on, like getting that stupid car that's been broke down and busted there for like a year and a half off the property, other stuff like that. What are your thoughts? Because I feel like if they leave, I'm gonna be stuck with the car with no title. Yeah, plus they owe me months of gas.
Oh, you're renting out of the car.
If I got stuck with the car, I mean, I have connections because I do a lot of car work and stuff. But my best bet would literally be to call my one buddy up and have him with his big giant, car lift, literally just pick it up and just cut the whole thing and just quarter the whole car with torches, and then just load it up into a dump truck and haul it off. Because at that point, it's then scrap metal.
I had a situation like that where the tenant was behind. We were starting the eviction. They did go to court and they agreed to catch up, which they did. So um, things worked out okay after that, except for the fact that probably 6 months later, I don't know what happened between them, the wife and husband. The husband moved out, and then the wife couldn't hang on by herself. So she was this eviction I've been talking about for a few weeks now. She did end up getting evicted. The other girl on the other side, kind of a similar thing. She got caught up, and then we decided to go month to month for a while and see if she was able to keep up. And then after that, she too wasn't able to keep up. I'm surprised that the woman didn't know it was going on.
I think he was doing his best to hide it from her.
Hmm.
I
Yeah.
don't know.
Could it
It
be?
seems like a pretty lame excuse to me.
Yeah. Could it be some kind of stipulation about the car that, if you are able to put them on a month-to-month lease, you're willing to do that as long as they get rid of the car right away, and then if the car's gone and they're on month to month, it would be maybe easier to get them out.
I could do that. I was honestly another thought I was had too is if they have the title and they're willing to sign it over to me, I have all the stuff. I could just bring my truck and trailer and half an hour have it load up on the trailer and just haul it off to the scrap yard,
Mhm.
and it'd be just done with. Because it'd be a lot easier if I had the title in my hand and I had the equipment to get it out of there.
Yeah. Mm.
They don't say they trade you one. The water. And that was bad. Have you seen it? Had them.
Let's see who else is here.
Oh, I got some good news if you guys want to hear that.
Yep, good news. Good.
So, I found a contractor to handle some of the work in the one new fourplex. And after he's done, he's going to look into the schedule, see if he can't get it done in the next week or two. I already found a tenant for that unit. So as soon as he's done, we'll sign the lease and get the ball rolling and have more money coming in on that place.
That is good news. Yeah.
Yeah.
And you're pretty close to all your properties, right?
Yeah, for the most part. It depends on where I'm at, but if I centrally located, if I'm staying up north, I could be at any one property in like half an hour.
Oh, okay.
Yeah, so that's not too bad. I like being close to all the properties. I like the market of the where the fourplex is, and my initial goal was to live up there. But after so many things have happened, I don't really care to live up there. It's too far out of the way.
Hmm.
like for my family and everything else that's going on in the city of Pittsburgh, it's just so far out of the way that it just makes it inconvenient. But I think by doing this, I found a special niche market that I can work with from here on out.
Yeah, that's so how much time do you need to make the decision on if you're gonna let those people stay?
I'm gonna sit on it tonight, and I'm probably gonna make my final decision tomorrow. I forgot my camera stand. I was gonna do an episode of Driving with Jack with my final decision.
Hmm.
I think more than likely I'm going to try and do a renewal. That way I can put them on a payment plan, get them caught back up on the gas and tell them that they have to take the gas bill. I'm tired of paying for because they just stopped paying, so it automatically kicked back into my name.
Mm, right.
And I'm just tired of paying for it.
How much money are you talking total that they owe?
I honestly don't know. I have to go through the receipts and stuff because it started sometime last year and stuff, so we're probably talking thousands.
Mm,
For your parents.
yeah, I wonder if it might be better to cut your losses. But this time of year too, I mean, if they even
That's
gave
my
you
other thought too.
yeah, if they even gave you something,
That's that's what I'm thinking. If I can renew and maybe do 6 months and hopefully have them pay me back, reimburse me for the gas that they owe me across a 6 month period, and then we'll play it by ear. Maybe I'll renew them again. Maybe I just won't at that point. But I think I want her to be my main line of communication from now on and not him because she seems a lot more responsible than he is.
mhm.
Old school fast bus.
Yeah, it's kind of a tough situation, but shoot, if it's been going on for that long and you've been paying the gas bill for that long, I would probably be at the end of my rope, but also being cautious about the time of year.
That's why I figured if they only pay me back for the back rent and the 6 months of rent till June, it puts me in a much better position to
Mhm.
just say we're not renewing, cut my losses with the gas, and just get them out and get someone else in there.
Yeah, I see.
Anybody got anything else?
I have one quick one for you, Frank.
Yes. Hi.
Old leaking pinholes and radiators. Any thoughts on that? How do you repair? Because I found I forget what you call it. There's like it comes in these little tubes you roll together. It's like an epoxy. It's specifically made for wet. Works great when it's dry. It didn't work when it was. I talked to my HVAC guy, and he literally goes to the basement. He cuts the line, has a bucket, and just quickly puts a cap on the line. But I don't know if you guys have any thoughts on because I got a lot of units that have radiators with hot water boilers, and when I modernize them, I thought about getting rid of them, but I realized the split systems I'm putting in don't quite. If it gets below like freezing or 10 below zero, sorry, 0 or 10 below it, they don't work quite so well, right? So keeping it as like a backup is a relatively cheap insurance policy. And then I have splits, so they're covering cooling and most of the heating, but I was just, so I'm keeping them, but I had never experienced in my entire life, like, after, a long time, the radiator starts to develop can develop these pinhole leaks, and it's just a pain. I didn't know if anybody had any solutions or thoughts on that.
I'm not sure how feasible this is because I've never worked on them or not, but I know with cars, old school mechanics used to do brazing and different types of soldering. I don't know if that's a feasible solution or even a
Yeah, no, it's a great
possibility.
point. It's funny. Cars are easier, right? Because you can get the bars leak. The little stuff looks like fish eggs you put in the radiator, and it seals the leak. And you can
Yeah.
and the problem I noticed with this is that the leak was not. It was like 3 columns, and you couldn't get. It was like in the middle of the radiator, like you couldn't get it from either side. Um, Access is the big thing, because usually if you fix a car radiator, you take it out of the car, and then yeah, sure, you can do that. But you know, in a house, you got a guy who's like, hey, it's leaking. So, I want heat, but I don't want leaking water. What do you do? And um, anyway, it was the first time I've ever experienced that. And, I'm trying to have like a playbook, right, for every failure mode. And I haven't figured out one for this yet.
Hey, I just had a second thought, and Frank could probably fill in the gaps. I don't know everything about the system. Frank mentioned it to me about a year ago. With those splits, what about those, what do you call them, in the wall furnace systems in addition? Is that what they're called, Frank?
Yeah, I was going to mention that as Chris was talking about the mini splits not working really well in really, really cold temperatures. So we just did mini splits in the triplex, and they reactivated old wall furnaces as the backup there.
What's a wall furnace?
It's just a gas furnace. Yeah, it's usually they can be one-sided or two-sided, where they have metal encasements on each side of the wall that the heat comes out of. Yeah, so it's just there in Missouri where our triplex is, they have natural gas. So
Interesting.
I was looking into those for a couple of my units because there's no ductwork and they're built back in 1800, so the upstairs has no ductwork, or like it's just holes in the floor with a grate on it.
mhm.
So I was looking into those just to put a furnace in between the two rooms so the upstairs has heat.
Do you they have do you have gas to the building?
Yeah, there's gas to the building, and it wouldn't be that hard to run a gas line up because there's a raised floor in the one unit. So all I would do is just run the gas up through the stairwell and just put like a little, L channel around it, like decorative, and have the gas line in there, and then just go straight through the floor on the other side.
Yeah, could be a good option for backup, and the tenants pay for the gas, all the gas.
They're supposed to. That's part of that same property.
Oh, okay.
Yeah, both sides is gas.
Cool. Well, that's helpful. I'm going to continue to experiment on mitigations for a leaking one, like real time, but I'll let you know what I find.
Yeah, it seems like the challenge would be to get anything to adhere with it leaking, with
Yeah,
that.
you're exactly right, Frank. I found maritime epoxy and all that stuff, and it all works great. It's resistant once it's dry. If you can put it on, it only goes on when it's dry. That was the issue. So
So those those radiators, are they not situated where you could shut the feed off to it and drain it temporarily and
yeah, I mean, the classic situation I've seen in the last 6 houses is the valves on the radiator are non-existent or frozen shut, and none of the individual radiators have. You can valve off like a side of the house, but you can't do individual radiator. So like that was my comment to Matt on the boot camp, and his recommendation was like zone the units, because I got a secondary issue where like unit 1 turns on the heat and unit 3 on the third floor bakes out.
Mhm,
they have their windows open, and like when it's negative, when it's like, freezing out.
mhm,
So one is zone the units, and two is, if you think about the way the zone works on radiators, there's a pipe that goes from the boiler to each unit off the main feed line, and there's a pipe up to the radiator and a pipe back. Zoning basically just puts a valve that's controlled by the thermostat on each of those, so all the unit ones are on the same, right? There's a valve on each radiator that turns it on or off. But if you think about a leak, if a leak happens in the radiator, even if the zone valve is turned off, the system is still pressurized. So the drain line, the water will backflow into radiator. So the conclusion I have is I'll zone the system, and for an extra couple $100, I'll say I want you to put a manual valve on the zoning valve will be the hot water in, and then I'll have you put a manual valve on the valve out, and then I can isolate radiators, and that'll solve much of my problem. But it's the leaking. I mean, because you think about it, like the radiators they're not at like city water pressure, but they're at least 10 psi. And if a leak pops there, like that can be a fair amount of water. And if there's no way to shut it off without depriving the rest of the residents of heat, anyway, and they're so low to the ground, and they're usually on hardwood floors. It's just
mhm.
I'm trying to figure out the maintenance solution, and since a lot of them are like, if you like, they're multi-column, and of course, this leak was in the middle column, in the middle of the radiator, no easy access. Anyway, just looking to tap the collective wisdom of the group. Didn't know if anybody have ever gone through that.
Yeah, I think though that age building is not too common.
Yeah. Clearly, Frank, you do not live in the Northeast, where everything is old and decrepit. So
We do that.
much like me.
That triplex that I spoke of was built in 1904. And that was the issue when we bought it, because it just had the one furnace and it was controlled by unit A downstairs.
Yeah, exactly.
Yeah, so that's why we did the mini splits, and we put a lot of money into the building. So
yeah,
we'll see how it works.
Cool. That was it. Thanks, Frank.
Yeah, that was the biggest complaint, and that was it was hard to keep tenants because they were paying, for gas, but they didn't have any control.
Yeah,
So,
exactly.
I would like to ask a question if nobody else has any questions.
nope, please do.
So I am challenging myself. I know, Zuber's talked about like the goals and everything, and I know, I provided some of the videos about like, long-term goal setting. So one of my challenges for uh 25 or 25, 26 is going to be to get a multifamily property. So I've already started looking, in all of the traditional places, Bright Investor, and then of course on all of like the traditional, Redfin, Trulia, Zillow, etc. Just looking to see what's available. So I'm starting, of course, in Detroit, since I've already got the other property that's up there. What I would like to know from a general sense from everyone, and I know this, I think, actually, no, I take that back. It wasn't one of these calls. It was one where we looked at it, I think, with Dion on Sunday. What are some overall considerations that would be, quote unquote, things to look for duplexes, triplexes, fourplexes that would not be things that you would normally be paying attention to, or would even be available in a single family rental? And I know one of the things, like with the shared or separate, not shared, but separate utility meters, I know that's one of the things, but just want to kind of get a general sense and understanding as I'm starting to really kind of do a quote unquote deep dive of understanding multifamily.
I think when I look at the differences between this single families that we purchased and small multifamily, obviously, like you mentioned, the utilities, on the triplex again that I keep talking about, our property manager, I think the gas is separate, but the water, the trash and the sewer would typically be our responsibility. We've been able to bill back the tenants a small amount to help cover that cost. I think you were with us when we were talking about, or maybe Dion, no, the guy last night, he was talking about that place in Iowa, and he was paying for the snow plowing and yard maintenance or lawn mowing in the summer. And we have that issue too. There's not a ton of snow where our place is, but in the summertime they mow it every couple of weeks, and that is also a requirement of the city, because if the grass gets too long, they'll write you up for it. And if it happens, more than once, obviously then they get stricter. But those are just a couple things that we have to deal with on ours. I like having both, having the triplex, the duplex, and single families. I like the simplicity of the single families because the tenant's pretty much responsible for everything. But also I guess the profitability is higher on the multifamilies. And like you've heard, if one unit is vacant for a while, it doesn't hurt as much in a triplex or duplex as it does on a single.
Yeah. So that was one of those things, like the Matt's BS to money ratio. And I guess that's one of those things where it sounds like I should pose this, I guess, as a question. Would you, and of course, after vetting all of the tenants, like let's say in like a triplex or a fourplex, would you allow the tenants to have say / input, or to say, hey, almost kind of like a not really interview, but like have them meet with the prospective tenant to see how well they would all get along, for lack of a better phrase. And if not, would you be more inclined, I guess, to try to allow them to quote unquote feel each other out?
We've gone through something similar recently. We inherited a building with 2 women in two units, nice, one young, one a little bit older, and an older gentleman. And it became clear after a while that the older gentleman was basically harassing and hitting on the young women. And we did not renew his lease, and we modernized the unit, made almost doubled the rent, which is great. And we went through that same thought process on the new tenant. But I think you just run too much of a risk of housing violations if you're letting other people who can't be objective. That being said, like, my goal was to get a female tenant, and we got one, and she was great, and she left, and we were looking for new tenants over the summer, and we ended up, finding, just as luck would have it, like only a guy, right? But I think I took the time to meet him and kind of feel him out and just say, is this going to be a guy who's nice, or is this going to be a guy who's needy, not just for me, or going to be annoying to the tenants? And I don't have a silver bullet for you, but what I would tell you, what we learned is once you learn the current, once you figure out who the good tenants are, and you learn kind of how they engage and who they are, whether they're families or singles or all women or all men, or I think you can nuance a little bit of that into your tenant evaluation process, which by the way you can do because the property managers never going to do this, but you got to be careful. It's not framed, it's not written, and it's not framed in a way that's going to cause you down the line some sort of housing violation issue. My humble thought. So.
Okay, yeah, no, that definitely makes sense. That like one of the uh right by the room, like with what Jared does in Arizona, even though he's not on tonight, that's one of the things where it sounds like a judicious understanding of like, how and maybe it is kind of a almost blend, if you will, of like how Dion, checks for like, the first few weeks or maybe month or so of like, does this person do, annoying things like, hey, the screen on the front door is, loose or stuff like that.
Yeah.
Or is it like, like legit true major stuff? Almost kind of as a proxy, I guess.
But I think there's another dimension that I wouldn't lose sight of, right?
Mm-hmm.
Multifamily, now it's a community, right? So it's not just how much of the tenant is a pain in the ass to you, and that's pretty easy, right? That's all the stuff you were talking about. You got to figure out how much of a pain in the ass is this tenant to other tenants, because the last thing I want. So I got one unit, it's a fourplex. I got one guy who, I don't know, retiree, whatever, inherited money, whatever. He rents two of the units, so half of my income comes from one guy, right, in that building. And I got a young couple in the other building, or middle-aged couple, and then I got a guy who's a little needy, but he doesn't bother the other tenants, right? And so you got to look at how are the tenants interacting. So like what I'll do is once a year or twice a year, and I usually have my wife do it because she's better with people, kind of being casual, right? I'll be like on this building with the two women and the one guy who was creepy, and we evicted him, and now we've got other people in there. Like I'll have reach out to the women and say, hey, how's it going? How's it going with the new tenant? How's it going with this? And there's a little bit of extra work in terms of managing the tenant to tenant relationships, because the last thing you want is a bad tenant to cause your good tenants to leave, because that is a death spiral you don't want to go into. So that's why I like the 1, 2, 3, 4, 5, 6 whatever units, because I think it's manageable there. Once you get into like 12 and above, like I couldn't even fathom. And maybe it doesn't matter there, but I'm trying to kind of like micromanage and provide a higher level of standard for the tenants. So I'm trying to kind of manage that stuff, really be mindful of it. And by the way, if I see a bad actor, I'm not gonna renew them, right? And then your earlier question around things to look at as you're getting a multifamily, side by side versus over and above, the ease of financing 4 and below units versus 5 and above, shared utilities you talked about, and then I will tell you a third floor. Every floor you go up is harder to rent. First floor easy, second floor a little harder, third floor a lot harder, fourth and above unless you have an elevator. I'm discounting my third floor rent $100 a month over second floor, even though it's just as nice and actually has some better features. So those are some of the things you're going to think about. I don't have any that, but if you have a garage versus not, there's a lot of that stuff. Side by side is best, but there's not a lot of those in my area compared to the older homes that were converted. Now it's like, first floor and then a second floor and then third floor unit. And then shared laundry in the basement versus in the units. I'm trying to put everything in the units, but I still have some that have shared in the basement. But I think laundry on premise is pretty important. It's a good differentiator. And then, splits, like window air conditioners suck. So the sooner you can get splits in there, the better. You can charge a premium for it. And they're also a maintenance nightmare. because you got to send somebody out to install them in the summer and take them out in the winter, and that cost adds up, right? Even if you got a maintenance guy, even if it's $50 a unit per in or out, like it just adds up. So those would be some other things to think about. And then last, the noise between units. If you got over and above units, like I actually bought a kit to like drill down the hardwood floors for the squeaking to kind of minimize. You can't get rid of it, but you can help it. That's kind of minor stuff, but that's the kind of stuff you have to think about. And then like common area versus not. If you have a multi-unit that has no common area, you don't have a common utilities, which means no extra utility bill. And the problem with the common area utility bills is that the electric bill has a minimum. Like even if you use 2 watts in a month, you're still going to pay $28 to $30 for the basic minimum fee. So if you have one that has their own separate entrances, there's no common area, no extra bill, right? So those are not make break decisions, but those are things just to keep in mind.
Okay, yeah, I have seen like now again in using Detroit as an example here, like there have been few and far between duplexes that are side by side, most of which
really rare.
Yeah,
I mean,
and they are
yeah.
like when I say dilapidated, like it may be easier to like do a full tear down and rebuild.
Bulldoze, yeah.
Yeah. And one of the things that was interesting when you were mentioning about some of the common areas, like for one of the ones that I saw that was like an up down, there was like a I guess one of the units was like as soon as you come in through the front door, then there's I guess like a foyer or a hallway, so to speak, and then there's like a set of stairs, and I guess that's like what's I guess you'd call the common area, because then after you go in through the front door, the lower level unit, I guess, is like in a door that I think it was like off to its left, and then the stairs were like on the right, and then
That
the
describes
other...
like a third of my units, just like that, exactly.
Oh wow. So that's where you would have to deal with the common area electricity.
Yeah, you need lights and in some cases some level of heat for the common area. Now you have to maintain the common area. So now I'm carpeting the stairs. I have to clean that every once in a while. It's not too bad, right? You have to cover a lighting in the common area. Maybe you have to cover the door locks because they're shared. So now you need a different locking system. I use digital, so it's not a big deal. Yeah. And so, I bought these Wiz bulbs from Home Depot. They're Wi-Fi enabled. They have a timer, so they turn on, at 5 p.m. and they turn off at 4 a.m. or they go to a lower illumination. But it's not a huge deal. It's just something to be aware of, right? It's an extra cost, right? It's common area electric is going to cost you $400 a year, and it's an area you're actually responsible for. So after you've had a couple of years of tenants and they wear down the stairs, you're going to recarpet them and refinish them, and you really get no incremental value for that, right? As opposed to if I recarpet or refloor a unit, I can charge a premium, right? So it's just, and then you get the laundry situation you got to think about, and then
That's a
these
good
places will
point.
often have basements, and then you have to determine you can allow the tenants to store stuff in the basements. My recommendation would be no. What's access and that kind of stuff.
Yeah, I'm glad you had mentioned laundry, because that now this is something where
Isn't Detroit a little different? Like they don't you don't provide the washer dryer appliances the tenants do? I heard that from someone. Maybe it was a millennial might.
yeah, I believe it's also the same, because it seems like that's a common theme in a lot of the Midwest cities, at least upper Midwest. I don't know if is Cody. Oh, no, Cody's not on one. But I believe that's also the case. Wait, Frank, don't you have a property in Wisconsin?
Yeah, I was going to say there we do supply the range, and in St. Louis we supply the range and the refrigerator.
Okay.
So yeah, goes a little bit different wherever we're going. Yeah, but we don't supply washer and dryer. And Chris had a lot of great points. I was going to say too, as far as the tenants, and that's, I guess, another benefit of single family, right? You don't have tenants on two sides or four sides or whatever it might be. And since we have property managers, our property manager on the triplex has a good sense about people who can get along with each other, that kind of thing. Just in discussions I've had with him before about tenant placement and things like that, he has mentioned once maybe twice that he passed on a certain tenant because he got a bad feeling about how they might treat the other tenants or maybe disrespect them or the rules or things like that. We've had issues with, at one time, somebody was smoking in the foyer, like you guys said, because ours is the same. Ours used to be a single family, big Victorian. And so you walk into the stairway and it goes upstairs, and they made 2 units up there. And that's why the heat thing was an issue. But that the duplex that we have is side by side, so that wasn't ever an issue. There was no issues between the tenants, but there's quite a bit more to consider on the small multifamily stuff. And Zuber always talks about, or he has talked before about, how the larger apartment complexes, you actually become a referee or a counselor or some things like that. So
Oh, yeah, I do remember. I vaguely remember him saying that. Yeah. Now that as soon as you said that, yeah. So okay, well, yeah. I mean, that's definitely a lot to consider. Oh, I remember what I was going to ask about. For the washer and dryers, though, would you consider coin op washer and dryer, or seeing if there's a way to have, like, let's take a duplex as an example, like a way to have two separate washer dryer hookups so that they wouldn't have to worry about sharing,
the only thing I've
or
ever
is that
really,
even possible?
go ahead, Chris, did you have something?
No, go ahead, Frank.
Oh, I was just going to say my basic thought about that was, I guess the coin machines are less expensive than the ones that they pay with a card on. And I would always wonder if whoever's collecting your change was honest.
Yeah, there's that too.
I would say you're going to spend at least 2x for a coin operated machine as you will for an individual machine. And I think about how many quarters you have to collect to make that up. I mean, if it's a 10 unit, yeah, that's fine, right? But then you'll need multiple machines, right? If it's a 2 unit or a 3 unit, like I've got a 2 and a 3 unit, they're all sharing one set of washer dryers, right? And they're fine. Never had a complaint, never had an issue. And
Do you
if you have
do
good tenants, they're generally not going to abuse it, right? I think if you're as you get into like B minus C plus tenants, that gets to be a whole different ball of wax, right? But my preference from a monthly rent perspective is to get units that have the ability to have them in. And I'm every time I convert a unit, I'm making it so that you can have the washer dryer in the unit.
Oh, that's actually a really good point.
Because I'm like Frank, if I do the coin operated, I'm going to do digital because I don't want to have to go collect coins. Like I got enough stuff to do, right? So, but
Right.
now you're talking. You could easily be talking 1,200 to 1,800 a machine times 2 washer dryer, and and then here's what I learned from that. Right, then the machine breaks. Is it a standard machine, where parts are readily available, or is it some and you can get that, right? You can get machines that are a standard machine that have been modified, but I don't know. It's just more complexity, more expensive repairs, and okay. So let's just say you charge for a washer dryer, you charge them what, $4, $5? I don't know. Frank is $6, right? They're gonna do 2 loads a week, $12 times 4, $48 a month. I mean, I don't know. Like, I don't know. The pain, the pain factor or the hassle factor versus the revenue, I haven't quite figured that out. If that's worth it yet. If you had a 5 unit or a 6 unit and you could put 2 or 3 of those in one place, they're using them, you got high volume and you can do digital, you don't have to click the coins. That makes a ton of sense. But I've also read a lot that when people pay for a wash, they tend to, I mean, they'll cram that machine full because if it's not
Yeah, you can get as
not
much
paying
money
for
as
it,
you
they'll
can.
space them out, right? But if they're paying for it, they're going to cram as much crap in there. I've qualitatively heard that the failure rate is higher because people are more abusive of the machines, but I don't have any data on that. But I think that's a reasonable hypothesis.
Yeah, no, and that makes sense because yeah, I mean, from that economical standpoint, you're trying to get as much bang for your buck
Yeah,
as you
it's what
can.
I did in
So
college, right? I mean, so
yeah, no, that definitely makes sense. And that actually was a good point about the in-unit washer dryers because I have seen those in I forget what you call it. Basically, like the uh, the 55 plus communities where like that was where my dad was before he had passed back in 2020, and he had a in unit. Uh, I think the dryer was over top of the washer, but it was all one unit all together. Um, so yeah, and it was. I think it was like basically inside of like a closet, not like the regular closed closet, but it was like if it could have been its own
yeah,
standalone mini closet, so to speak, or area, I
yeah.
guess.
You you have four options. And unfortunately I'm overly burdened with 1 bedroom units, which is not a good thing. But you can do side by side traditional, top load or front load. That's the easiest, cheapest, most convenient. You can do you can do separate units that stack, which is great as long as you can get access to the backside, but same cost. You can do what they call laundry centers. Whirlpool and Frigidaire make the best ones. They're reasonable. There's a couple different sizes, but it's one unit, but it has a washer on the bottom, dryer on top. I've got 2 units that have those. And then based on Matt's recommendation, what I started to do, and I've got 3 or 4 of these now, is the single hybrid units, which is kind of what, frankly, Europe's been using for a decade. But it's one unit. You don't need 240 volts, which is nice. That saves your electric bill. You only need a 220, but you need water in and drain out. You do not need a vent. The units are expensive, right? What I paid for the GE, not the high end. The high end's $2,000. The low end's $1,000. It's roughly the same cost as a separate washer and dryer, but it's the size of a dishwasher to the point where, like, I'm debating putting it in a kitchen, like at the end of a counter run towards the back wall, like, and I've got 3 units of those now. The tenants have been in for 6 months. I was very upfront. I'm like, guys, like, new technology, been in Europe for 20 years, works really great, super quiet, super energy efficient, washes really well, but stuff that normally would take an hour to dry is probably like, go to work and come home and they'll be dry, right? But you put your clothes in, it washes it, it dries it, all one cycle. I said you're not going to be able to like throw clothes in the washer at 5 and go out for drinks at 7 or 8. You're going to throw them in at night or throw them in the morning, and they'll be done when you wake up or when you come home in the morning. You may have to hang them for a few minutes. 6 months, no complaints, right? Now they're young kids, they're more technology savvy, they're a little bit more flexible, but those are your options. I will say the hybrid units are more complex. They're smaller, only suitable for 1 bedroom, 2 bedroom, or people with kids. No way, it doesn't work. But those are your options. But the stackable laundry centers, My in-laws had them when they were kind of retiring and kind of downsizing. But I also have, I have a triplex that uses one of those, a Frigidaire one, and they're pretty solid, pretty reliable. So, and I would stay away from front load washers at all costs.
Okay. Yeah, I've heard a lot of horror stories about front load washers, so I definitely will
I have them at our
definitely
house and I like it, but for a rental, oh my God, no. Because yeah, no way.
okay. Yeah, I've only ever had top load washers. But like all the horror stories that I have heard from friends and family who have it, like they get it, you know, there's the honeymoon phase, then something happens, and then, you know, 12 months later, you know, never the same as it was before, and then they
Yeah.
just ditch it and get a top load.
They're higher maintenance. It's just a matter of, but and then I'm just channeling Matt here. This is his exact quote, right? Again, for your house, fine. For rentals, never. No LG, no Samsung. Because I can't tell you, like twice I've called repair guys and I'm like, hey, I got this appliance, and like, what brand is it? And they're like, Samsung and LG. Like, now we won't do it, right? Too hard, too expensive to repair. Parts are too hard to get. Won't do it, right? So even though I love the appliances, they're techy, they're new. In some cases, they're cheaper. But for rentals, I've at home I've got LG for washer dryer. I've got a Samsung appliance. I've got a Bosch dishwasher. But for rentals, I think I've kind of come back to the GE Whirlpool, Maytag kind of mentality for a lot of the appliances.
Okay. Yeah, that definitely makes sense. And I do remember Matt talking about the brands or manufacturers to avoid, like the Samsung and LG. So I
Yeah.
definitely agree with that. So okay, yeah, that definitely makes a lot of sense. So gives me a few more things to think about. Yeah, so I'll probably kind of put everything together, and you know as I'm looking at properties, kind of keep everything in mind. And I think that was one of the ones I told Dion. I think it was a duplex that I told him I was going to be taking a look at on the next call. I think it's this weekend. I can't remember, but whenever it is that we're going to be meeting next for the course call. So a few different things to consider. So definitely appreciate that, guys.
Yeah, of course. I think last week he moved it to Sunday because of Matt's boot camp on Saturday, and Jason attends that. So we'll have to wait and see what he does this week. But I think we'll call it an evening. I'm gonna have to go have some dinner.
Oh yeah, it's just shortly after midnight over here. I'm looking at the clock now. I'm like, holy cow.
Yeah, we made it again. 3 hours.
You need to have a dinner. You should be just eating and then doing the swim at the same time.
How's your rental going, Chester?
So far so good. I do need to get back in touch with the property manager again. So I did get the tenant's credit score. It was in the high sixes. No evictions. Got to go back and look at the email, but we had a couple of different discussions. And 27th, I think that's next Wednesday. Yeah, next Wednesday. So they'll be moving in Next Wednesday, they'll be this is the time where they're responsible for getting an account set up for water and sewer and electricity so that those will go into the tenant's name on the 27th. And then yeah, so from there, yeah, it seems like everything's going fairly smooth right now. Like I said, they haven't moved in yet.
Good. Well, keep us updated. I'm sure. Well, when did you say they're moving in?
Next Wednesday, the 27th.
Okay.
Thanksgiving.
Yeah.
Yeah,
really
it was like the day before Thanksgiving, and I think it was because the way that the special that the property manager ran to try
Free
to
turkey?
encourage. Say it again.
Free turkey?
Yeah, may as well have been. It's it was a discount on the hold on one second, I'm trying to remember. Discount on the first month's rent, and then at the end of the whenever the tenant decides to leave, the cleaning costs, I offered to do the cleaning costs for the property to get it ready for a new tenant. So those were only going to be available until mid-month. So it sounds like whoever had applied did so before the 15th. So
all right. Good deal.
so
Did you,
yeah, very exciting.
did they collect the money yet for first, last month, and deposit yet?
I did not ask them that part yet. Like I said, I do need to follow back up with them. So yeah, I'll ask them about whether or not they've collected first and last month's rent. I'll put that in my list of notes right now. So I'll have everything ready when they do, or when I do get in touch with them. So definitely appreciate that, Mitesh.
Congratulations.
Yeah, definitely. Thanks. Yeah. So it's all of the quote unquote, the devil's in the details now. So a lot of the little small things that, would not necessarily have had to think about before, but now is kind of, oh, says Mikey, where are you getting drunk tonight? Troublemaker. So now inquiring minds do want to know, Mikey.
Public park.
Sounds like that'll be interesting. Is so actually, Mikey, are you and Mark near each other, or
We're on opposite sides of the island.
You want to be as far away from Mark as possible.
If I could be at another island, I would, to be that much farther away from him.
Ouch.
Heard that.
What'd you say, Mark?
I heard that.
That's hilarious. Are you at the firehouse or are you is this your
I'm at that firehouse. I'm working, man.
Yeah,
you
you're working.
I'm always working. I'm always here. I don't know about the working part.
I was gonna say like you may be at the firehouse, but I don't know if you're necessarily on this working. Oh, that's cool. So, but you're on the Big Island, right, Mark?
No, we're on Oahu. Me and Mikey. I think native to Earth, native to Well, what was his name? I think he's on the Big Island.
Oh wow, I didn't know there was somebody else who was from Hawaii. Huh, that's cool.
I think he had popped on once. Christian?
Yeah,
Oh,
he had been on a few times with us, but he fell out.
Yeah.
He
I
was
think he
like,
got married.
oh, did he?
Yeah, I think so.
Hmm.
so his new favorite phrase is "Yes, dear." Understood. Gotcha.
What, does anybody know what other speakers are going to be there yet? I still don't quite know who all the other speakers are going to be at the event.
He did a video a few days ago. He described it pretty in depth. I don't remember any of them, and nobody really sparked my interest too much about, except for Matt and well, of course, Dion and Millennial Mike have some time on there, and Jeff and Suleika the next day. He has some kind of surprise, he says, but we'll see.
Yeah, I will. I don't know if any of the speakers from this past year are going to be. I'd have to go back and look at the video. But Adrian, like his talk or whatever you want to call it, his was actually I think pretty good because like basically everything starts with mindset with well really anything but definitely real estate investing for sure. So I would like to see him have a spot or slot in this year.
Well, I think he's grouping a bunch of them together, and they'll be on a panel all at one time for everybody to ask questions. Because he
Okay.
mentioned, Casey and a couple of other people. I think he said like 5 or 6 of them at once.
Interesting. Was this one of the videos that you were talking about that Zuber recently did about the event?
Yeah, he has said that on a couple of the more recent ones.
Ah, okay.
It was not the Daily Financial News. It was a standalone video.
Oh, see, that's one of the things that gets a little tough is because like whenever the videos do come out, Zuber puts out a lot of videos. I'll just put it like that. Not trying to, say anything, is bad about it, but Zuber puts out a lot of videos and like try as I might, I cannot keep up with all of them. So I mean I'll have to go searching for it, but yeah, definitely do appreciate the heads up about that, because that's something where I was like, would not have known to like go back and look for them. So definitely
Yeah.
appreciate that.
Yeah, it was about a week and a half ago. Maybe a week, but
Oh wow. Yeah, I definitely missed it then. So I'll have to go back and do a thorough search. 'Cause he puts out like 5 or 6 videos a day, I think he said.
there's quite a few.
That's a lot. And the thing is, it's not like they're like, not like they're like low quality is the way I'll put it. Like they're very good quality. And again, of course he doesn't edit them and do stuff like that. But, again, with the focus and emphasis on authenticity, I mean, these are great conversations that he's having. Like, matter of fact, just before the call with Donato about Bright Investor, I was looking at the video with him and Beth Traverso, where Beth was saying, there's a almost light switch type of level of activity that mirrors the rental market with the home buyer market, in that, pre-election, leading up to the election, it was crickets. And then, the week following, of course, I had my story about, getting a renter in, other people had the same thing. And then she was kind of chiming in about how, not necessarily getting over asking offers, but, definitely a lot of volume pickup. So,
Mhm.
yeah. So it's not like the videos are low quality. They're all definitely very good quality, but just trying to keep up with all of them is fatiguing. So I definitely say hats off to him for being able to do all of that. It's difficult to try to, consume all of the content. And actually, speaking of content, Mark, what type of schedule do you have when you go live? Because like, are you just trying out different times to see like when's the best time available? Because like a couple days ago it was like 10 at night, and then there's other times where, well, 10 at night local for me, and then there's other times where it's like 11 in the morning or noon, and I'm just like, I can't figure out like what the rhyme or reason is behind it.
Yeah, I just go whenever everyone else can go. I mean, it's pretty much just kind of who's available and um yeah, that's pretty much it. So usually I message probably like 5 or 6 people and say, hey, whoever's available at this time is, and then probably about half of the people will be like, I can't make it that one or whatever, and then just pretty much this who's available and um whenever everyone can fit it in their schedule. So like
God,
Frank was on the other day and he had a dentist appointment, so he hopped on and he just yes, he just bounced off when he had to get off.
okay.
Curtis is a little bit harder because now he's back to teaching. School was back in session, so he's a little bit less available. Jack has kind of a weird schedule. Mikey always shoots me down. Mikey never wants to come on. He's too busy drinking. And then who went? Oh, Hyder. So we went kind of late last night because Hyder was available, and he's his schedule is pretty busy too. So I told him, hey, if you want to go on tomorrow night, let's do it. So it was more just to accommodate his time.
Gotcha. Okay. Because I remembered a while back, I think you were like looking at different times to see like what was like you know, an optimal, I guess, time. So but that makes sense in terms of like just as far as availability.
Yeah, I mean, it was when Sierra and Lauren and Joe were all pretty available. It was easy to kind of be kind of a set time. Sierra was kind of busy, and Lauren was traveling, and Joe was trying to get some lending business going because they're kind of dried up right now, so he's a little more busy on that side. So it's been a struggle getting like consistent people on. Like Frank has an afternoon nap probably, so I can't like interfere with that. And then, you know,
Are you confusing? Are you confusing it with Dion?
I'm up at 6 o'clock waiting for Home Depot to open, so just shoot me a message. That's 6 o'clock my time, not your time.
6 o'clock your time is what, 4 o'clock for me right now?
Yeah.
Yeah. I mean, I could, but I mean, I'm up early, but yeah. Yeah, I just go. Plus, it's the easiest way for me to get content. Like, I don't really have to come up with too much of an idea, and I just try to cut up whatever comes from the lives. So, like Frank has some good lives out on my Instagram, like on his now, talking about bankruptcy and what was the other one? Oh, even like Ned. I completely forgot Ned had brain surgery, like that brain tumor. And that was pretty interesting getting into that.
That was wild. And Harrison had a similar scare, right?
Oh, that's right. Yeah, Harrison had cancer. He just kind of just beat cancer, and he's gonna have a baby in January, I believe. But the wife gave him the thumbs up, so he'll be in Vegas.
Wait, you said Harrison had cancer?
Yeah, he just beat it, or got maybe this year he got the good news about it that he beat it. So that's actually why he's in Virginia, because he was living in the Washington, Seattle area, I believe. And then the wife's family, I believe, is in Virginia. So that's when he kind of got the scares. That's why he relocated back to Virginia to be by family.
Yeah. Oh wow. That I vaguely remembered that, but like because it was like I think it was like on one of your lives where he had mentioned that, wasn't it?
The actual like interview stuff I did with him, he talked about it, but he mentions it once in a while on the live.
Okay. Yeah, that's wow. And I guess because I only see him every once in a while, like I mean, obviously it's not really top of mind, of course, REI is usually top of mind, but wow, I didn't even think about that.
Yeah.
Wow.
So, oh yeah, he has a good attitude about it, and then like I said, but Ned, I completely forgot. Like he told me about it before, and then he kind of brought it up the last slide. And he was talking about it, so he had to relearn everything. He had to relearn how to like talk and walk and everything.
Wow.
Did you meet him in Vegas last year, Chester?
Was that Ned or Harrison?
Ned.
Is his name Ned or Denver?
His name is Denver, but he kind of goes by Ned. I think he likes to likes to hide his
I see.
name, I guess. I don't know, yeah.
Okay.
I know I'm gonna get edited out of this anyways. So I think Ned is a lot more successful than he leads on. And he kind of doesn't want to. I think maybe people know because he always talks to me about like his goal is to have like a private jet and all that kind of shit.
Wow.
Like he wants to be like Fat Fire, like
That sounds like
continuously.
morbidly obese fire to have a private jet.
Yeah, his plan could be to be flying a private jet to Vegas. Like I don't know if
Oh,
he's like renting it just to fly there for the event. Um, so that's kind of his goal, I think. Like that's why when we kind of talk a lot about covering our expenses and having a certain amount of cash flow, that's why he likes to be on because he has a complete different kind of angle. Like he's like, oh no, like I want, like I'm like he wants to grow and continuously be scaling in a sense.
My goal was to rent a seat in the plane.
Not yeah. Like he wants to like, but so he also like his worry is that like he doesn't want to just to be him and the wife, right? Like he goes, I want to just travel with just us. Like I want to get a plane where everyone can go, So I guess that's why like if he in a sense gets his own private jet or whatever, then everyone can travel with them, right? Or his friends. So that's I guess that's kind of his mindset or vision. But yeah.
okay. No, that definitely makes sense. Huh.
You're finally talking about stuff that will keep you in the video, Mark.
I don't know. I always try to, but somehow I never find myself. I better talk to your editor.
Do you actually watch the videos?
Of course, man. I watch them and I try to pick out stuff I can make fun of people about.
Watch out, Frank has vid IQ. He knows. He knows all.
Yeah, I know. But you
You
didn't
got-
answer my question. Did you show up to the ladies of ORAT Zoom this morning, or did you? Or did you answer me?
I
No, they
answered.
locked
I
it.
said, yeah,
Oh,
they locked the door. I was trying to identify as a woman, but they didn't believe me. You got to watch it because my editor just walked in.
Oh, okay. I was gonna say when you had mentioned that you tried to identify as a woman, do you think Cynthia would have have approved of that?
You need a wig and some lipstick.
She might have been like, yeah, that's definitely not gonna fly.
Like, you got to stop hanging around with Mark.
whoa. My goal is to get someone arrested in Vegas in February.
Get
That
someone
shouldn't be
arrested
too
in
hard.
Vegas. Why would you want to get somebody arrested in Vegas?
It's great content, man.
That's not content. Not content, mother. What in the world?
You just
And
changed.
maybe
You just changed Matesh's mind. He's not coming now.
No, wait. Now he's like he wants to see who gets arrested. I'm putting my money on Mikey.
Oh, oh man, don't wake up the demon. No, don't wake up the demon.
Now, if I had to put money on it, Suleika's getting arrested this year in February.
you said Tuleka?
Yeah,
How do you figure she would?
I don't know. She just seems like she wants to have fun.
Well, there's having fun and then going off the deep end. I
True.
don't,
You don't see too much of them anywhere, do you? Or am I just not?
She's been commenting a lot on my stuff, and I told her, anytime they want to come on, they're welcome. So I don't know if, yeah, there was a little lull where I think they might have been busy, you know, whatever rehab or house hacking. But I've noticed her, and maybe it's because it's getting closer to the event, so she's trying to like reconnect with people or whatnot.
No.
Um, but yeah, the guy that's been kind of missing in action is Wissing. I don't know. He hasn't
yeah,
been.
where's First been?
Well, you know what? Honestly, I think what it might have been, and I seen him post something, and I have a feeling, uh, that the election, just not one way or the other, just more of avoiding the whole talk about it in a sense, you know. So I think I have a feeling that's kind of why he's been kind of MIA. I think he got a property too. I think he might have got a deal from someone in school. Someone brought him a deal, if I remember.
What?
So he, yeah,
Nice.
there was a post. I think the guy, if I'm not mistaken, the guy Robert, Comstock, may have found a deal for him in his market or close to him in California. I'm pretty sure if you go look to the search, the guy Robert may have found him a deal.
Wow.
So yeah, I have a feeling he might be working on that, but he doesn't reply to my jokes or when I make fun of him anymore. So I'm not sure.
Well, it was either the election or you. I've been on you.
It's probably both. It's probably because I've been talking about the election so much that he didn't want to bother with me.
Yeah, some guys they just like to make moves in silence.
Yeah, yeah, yeah. But yeah, it's always I know yeah. I better not talk too much. I don't want to get cut out too much of this one.
Okay, I'm really signing off now. I have to go.
Hard stop.
All
Thanks,
right,
you guys.
fellas. It's always
All right,
fun.
guys.
We'll
All right,
see you
everyone.
soon.
Good night.
Alrighty, have
Bye,
a good
Anna.
one, guys.
Okay, bye.
Bye.
Alrighty, have a good night,